Hi, I'm Shaun Farrugia from Optimised Accounting. Welcome to our third and final video on the Medicare levy surcharge and private health cover. Today we're going to look and see whether or not the more stick and less carrot approach that the ATO, the government rather, gives as your income increases, whether or not it still is cost effective to keep private health cover. Once again, we're not giving any kind of health advice of whether or not you should keep cover. We're purely looking at the numbers here. We're going to do two examples, first as a single and second as a family. For the single example, we're basing it on a private health cover premium of $2,000. Obviously, if your premium is a little bit higher or a little bit lower, the numbers will change, but the percentages and ratios will stay the same. So if you're a single and you earn less than $90,000, the Medicare levy surcharge is zero. So you're not actually saving any tax by having private health cover. The ATO does give you a 25.415% rebate though. Now this is the carrot. So the Medicare levy surcharge is the stick, the rebates are the carrot. You'll see that the surcharge goes up, so the stick keeps increasing, while the rebate goes down, which is the carrot decreasing. So there's no stick. The carrot's $508 per year, meaning that your private health cover costs you $1,491. So you've got a cost there, nothing really saved. Now, income tier number one is between $90,000 and $105,000. So we're just taking a midpoint here of 98K. On 98K, the stick at 1% is $980. The rebate drops from $508 down to $338, which means that it's a cost of getting the cover of $1,661. The health cover is more expensive in this example. Obviously, as you move up that premium range towards the 105, the difference will taper off a little bit. For tier 2 and tier 3, so 105 to 140 is that tier. We're going a midpoint again of $123,000. It's based on the stick of 1.25%, the surcharge. The amount that you would pay in surcharge is $1,537. You'll see that the rebate has actually halved again to $169, and the cost of having the cover is $1,830. So at the midpoint in that range, it is actually more costly to have the health cover. However, as the income increases in that range, it would neutral out a little bit. Once we get to tier 3 where there's no rebates, this is on an income of 140,000 plus. We're just going to base it on 150, so add an extra 10,000 to it. The stick is actually 1.5%. There is no carrot. So on 1.5%, $2,250 is what it's going to cost you if you don't have the health cover. The cost of the cover with no rebate is still $2,000. So it goes up as we go along. It is actually then still a little bit cheaper to have the cover at that level, and as the income goes up and up and up, it will remain cheaper to keep that private health cover. And now on to families. So in these examples, we've doubled the cost of the health cover from $2,000 for singles to $4,000 for a family cover, just to keep everything in line. On this, if the family's earning below $180,000, there is no stick, 0%. There is a rebate of $1,016, meaning that there's an out-of-pocket cost or a difference of $2,984. If the family income is between the 180 and 210 mark, so we've chosen the midpoint of 195, the stick, by not having health cover, is $1,950. The rebate drops from $1,016 down to $677, which means the out-of-pocket cost is $3,322. So in this case, it actually would be cheaper to have no private health cover. The difference does sort of taper off a little bit as you get higher into that income range. Rebate tier number 2, which is the third column, between 210 and 280 of family income, midpoint of 245. The penalty or the stick, 1.25%, is $3,062 to not have the health cover. The rebate that you would receive halves again to $338, I think that is, which means that the out-of-pocket cost is $3,661. Once again, at the midpoint in that tier, it is actually more expensive to have the health cover. And in the last tier here, where there is no rebate, so that's $280,000 plus as family income, you basically would wear the surcharge of $4,200 and versus a cost of $4,000. In this case, it is actually cheaper to have the health cover. So as you can see, having health cover isn't necessarily always the most cost-effective option. Saying that, people do choose to have health cover for their own purposes. We do encourage you to shop around, make sure that you are getting the best bang for buck on your health cover. And remember, if you really are only getting health cover for the primary purpose of saving the Medicare levy surcharge and not get penalised, you do not need extras cover. You're probably better off putting the money that you save from not having extras cover into a bank account to pay for the dental costs and optical. Once again, though, we can't give advice on this side of things. Please do your own research. We hope that this has been informative. If you do have any further questions, feel free to visit our website and look at the information pack that we have available. Or alternatively, if the answer isn't there, please ask us. Please send us an email and ask the question. Have a fantastic day. Thank you.